What's going on, everybody? Going to be a quick recap on today. We're going to talk about some tips and tricks and how you can trade these very one-directional trading days, these one-time framing trading days, right? It looks like you can't ever get into a trade most of the time when these are just trending so aggressively in one direction. So let's talk about how you could have possibly traded today. So starting off with ES, we have the trade plan from today. We were looking for holding below 75. We were looking for that 63.40. We did, in fact, get that 63.40. The reason we were looking for that was the value retrace of yesterday. So we were able to break back below that value high, and pretty much the entire day, you just push down towards that value low. Below that, we were looking for an extended target of 317, and that would have been the value retrace of Tuesday. So very one directional to the downside there. We did have a bit of a closing spike, which we'll talk about here in a little bit. We'll talk about what to look for on that pattern. It's a pattern that we have been seeing quite a lot quite recently, I should say, excuse me. So that closing spike was to the upside back into the POC, possibly looking for that value high at 78, maybe 87, if it had like 30 more minutes on the day. So looking at the trend indicators like the OTS, the EMAs, what could you have looked for on today? So normally in our morning trade plan, we talk about watching that 30-minute trail to kind of get the general idea of what the trend is doing. And we have been seeing this pattern recently where the overnight is pretty one-directional, kind of follows the prior day's trend. And then we open up kind of sitting on that trail. And we have to decide right away, is it going to bounce off that trail and continue the trend, or are we going to lose that trail and fall off a cliff? And recently, we've been seeing it fall off a cliff quite a lot, right? So we had that cliff right here, that trail at around 400. You had it flipping red at around 10:30 a.m. You had that really nasty candle at 10 o'clock, losing the 400 level, and then you traded below that pretty much the entire day. You did back test it on the closing spike at around 73, damn near to the tick there. But we also were trading below that 80 MA, that teal line on my chart, pretty much the entire day. So when you see that on the 30-minute chart, when you see it aggressively breaking the trails, aggressively staying above or below the 80 MA, you really want to focus on being with that trend. You can look for micro reversals, right? So for example, today we had a very bearish trend. We were staying below that trail. We were staying below that 80 MA. So if we want to look for quote unquote reversal trades, we're not looking for a reversal of the entire trend. We could be looking for reversals of, say, like the 1 minute. So we're looking for these like micro reversals that are following the overall trend. So our overall trend is very bearish. So we're looking to sell these little traps, right? These are still reversal trades, just on a much smaller time frame. You're not looking for a reversal, like I said, of the entire trend, just of that little trap. So you could be a seller on those traps, right? So that's one way that you can trade when you have these very one-directional moves, is you want to look for those smaller traps on the lower time frames when you are one time framing on your 30-minute. I typically look for this on the 30-minute. You can look for it on other time frames as well, but mainly the 30-minute is what I like to watch. And what do I mean by one time frame? If you guys are not market profile traders, you might not understand that term. And basically what one time framing is when you are aggressively pushing in one direction. So for example, the 30-minute is breaking the prior candle's low. It is not testing the prior candle's high. Once you do that 2 to 3 times in a row, you could say that you are one time framing. So like this candle right here, we broke the prior low. We did not break the prior high. Next candle, broke the prior low, did not break the prior high. It did that pretty much the entire day. You did have a little high break on that 12 o'clock candle. It broke that prior candle's high, but it turned out to be a sweep. So when you are one time framing very aggressively, you can break those opposing levels, those extreme levels. But if it turns into a sweep, I would still say that you are one time framing. And you can look for those as pretty good trades as well. So if you're aggressively one time framing bearishly, and then you see it break that candle's high for the first time the entire day, but it ends up failing and sweeping that high, that might be a good trade to take on the short side, possibly putting your stop loss above that candle's high and then looking for lower value, right? You had that happen a couple times today. And let's take a look at how that looks on like a delta chart here. So if you guys are used to looking at my delta chart from the live stream, I have this color coded to show us that one time framing. So the candles will color themselves purple if it's one time framing bearishly. If it's breaking both sides of the candle, it will color itself teal. And then if it's breaking the high, not breaking the low, it will color itself yellow. Okay, so purple candles would be bearishly one time framing, and you can see pretty much the entire day we were purple except for this teal candle, but that was the sweep candle. So you swept the high, you tried to break out on the next candle, the following candle, could not break the high, double top on that 30 minute. And that continued lower, purple, 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 purple. And then we had, if it's not color coded, if it's just green or red, that means it's not breaking either side. Think of like an inside bar. Now, this is one thing you want to look out for. Let me full screen this. One thing you want to look out for when you are one time framing, and let's say today we were looking for shorts pretty much the entire day, right? So we're looking to sell those micro reversals on the 1 minute OTS trail, the 1 minute ADMA, whatever it may be. We're one time framing bearishly, so we want to keep that bearish bias. Now, what we want to look for to kind of change our bias a little bit is, does that one time frame come to an end? Are we no longer one time framing? What does that mean? So what does one time framing mean? It means that we are pushing aggressively in one direction by breaking one side of the candle and not breaking the other side. So how do we stop doing that? The candle would stop breaking that extreme. So for example, right here, we are no longer breaking that lower extreme. So it is not one time framing bearishly. So think about this on a lower time frame, that would be a higher low. It's even a higher low on the 30 minute, but you get what I mean. It would be easier to see that if we were on like a lower time frame. So if we went to like the 5 minute, you could see right here, it's putting in a higher low. Okay. So when you stop one time framing, you stop breaking those extremes, you are beginning a market structure flip, possibly to the other side. So then we want to start looking for the other extreme. We want to start looking for the highs in this case. Are they going to start breaking those 30-minute highs? And on this candle here, the one that created the higher low, it did not break that 30-minute high. So it wasn't exactly flipping the trend just yet. It was just showing you the trend was weakening. So for example, if we were holding a short and possibly using this as a runner, if you see something like that, if you see that higher low come in, you probably want to start looking to close your runners, start closing your short trades, and possibly start looking for buy trades in this case. And then obviously once those 30-minute highs start to break, that confirms that that one time frame is no longer happening. Okay. Now, another pattern that we have been seeing recently that we did see today to a pretty large degree is when you are one time framing very bearishly or very aggressively to the upside, the closing spike, the last 30 minutes of the day, is typically counter trend. So like today, look at how aggressive this closing candle was. So if you like taking I'd say they're pretty risky. If you like taking pretty risky scalps, you can look for a counter trend closing spike the last 30 minutes going against a prevailing trend. If the day is very P-shaped or very lowercase b-shaped or just trend-shaped and you're very one-directional, look for that closing spike that last 30 minutes or even maybe the last 15 minutes going against that trend. Now you can see different kinds of closing spikes. You can see closing spikes delta. You can see closing spikes in price. You can see them in both. It really depends on how well the delta was following the price throughout the day. So for most of today, price and delta were trending down pretty aggressively, which we can see on these charts here. The delta was trending down very aggressively. And then look at this. Look at the closing spike. I'm about to get to it here in a second. You can see the delta starts to bottom out kind of around 230. So it kind of started to increase in delta a little bit early, not because of the closing spike, but just because the bearish trend was kind of coming to an end. And then look at the spike here. So delta just starts to explode into the close. So you slowly started to go counter trend, and then it exploded into that close. You reclaimed negative, 13,000 delta in the last like 5 minutes. Okay. And you actually ended up closing right on VWAP. So that's one thing you can look for on days like this where you're very one directional and you feel like you just couldn't really get any trades. If you want to go for a risky trade in that last 30 minutes, you can look for those closing spikes. Now, like I said, it's risky because it's kind of a coin flip. It's pretty hard to predict if the closing spike is going to be counter trend. But I would say recently you do have a slight edge in the counter trend department. It's a higher chance that it will go counter trend, meaning if the day was very bearish, you might want to trade the last 30 minutes to the upside and vice versa. One more thing I want to teach you about these very trendy days. And this is a really good pattern if you guys are volume profile traders and you kind of struggle to visualize the nodes on volume profile. So with volume profile, let me actually close this full screen for now. And let's look at the volume profile here. So normally when I'm looking at this market profile and this volume profile, we're looking for the shapes, right? We're looking for the D shape, the P shape, the lowercase b, whatever. We're looking for the imbalance or the balance, right? If it is a D shape, D as in dog, that is a bell curve. That is a balanced profile. We want to be a seller around the value high, a buyer around the value low, and we want to look to trade that rotation. So we buy the value low, we could probably sell the POC for a take profit, sell the value high for a take profit, and possibly flip into a short position, and vice versa. Just keep doing that, rinse and repeat. So when you have that D-shaped balance, it's not going to stay in balance the entire day, right? It's going to look to break balance every now and then. They're going to look for higher value. They're going to look for lower value, right? So in order to do that, they need to break above the value high and hold value, build a node outside of that value high. Okay. And in today's case, the value low. We broke the value low and we started holding value outside of that value low. Now, normally, what we would look for if we wanted to trade something like that is we would become kind of a breakout trader, right? We'd be looking for lower value. Our stop loss would be above the value low. If it goes back into rotation, we get stopped out. If it doesn't go back into rotation, we look for that breakout to the downside. And we look for two things, two very important things. Are we building value? And are we protecting that value that we built? And what I mean by that is at the start of the day, we were balancing on this A and B session. We were kind of chopping back and forth a little bit. But then you started holding below the value low right around 10:05. And that was around 95 to 400. That's when we lost that trail that I showed you guys earlier. So right around 95 to 400, kind of in this area here, we started to break to the downside. So normally, if I was just looking at a profile, we'd look for those two things, building value and protecting the value that we built. So we look for building value by looking at the nodes. We want to see those nodes continue to build. Kind of like if you look at my DOM right here, you can see how they're building a node right here at 71. So we want to see those nodes building up. And we want them to be larger or relatively the same size as the node that is closest to the value level that we are breaking. So if we're breaking the value low, which would be right around here, we want these nodes to be relatively the same size as that node around 400. And that would establish that they are finding value outside of the actual value area. Okay? So that's the first part. That's building value. The second part is protecting value. What do I mean by protecting value? I mean that if we built that node up, in this case, let's say the node at 90, and that would have been right around like right here, building this node up here. When it goes back to retest it, in this case, we're bearish, right? So when it bounces back to retest that node, are they selling it immediately? Are they protecting it bearishly? Right? So you can see right here, they're building up that node at 90 and they push away from it. And as long as they are pushing away from it and continuing to build value away from that node, or if they're pulling back and hitting the node and then selling it immediately, they are continuing to look for lower value in this case. Okay? They are building value. They are protecting that value. They can protect the value by selling the retest or just going away from it, pushing away from it and building further value to the downside. Okay. So a trick that you can do if you struggle to see that on the profile, if you guys are on Addis or any platform that lets you do dynamic POCs, developing POCs, sometimes is what they're called, you can start a developing POC from the breakout candle that first broke that value area. So in this case, we broke the value low at 10.05. I can start a developing POC from 10.05. Another thing I can start from 10.05 is a anchored VWAP, basically serving the same purpose. Are they continuously moving downward? Are we continuously losing value? Because we're in a downtrend, right? We want to lose value. As long as they are continuously losing value and we are protecting them bearishly, this can continue to go down. If they start flipping these nodes, so like you see every time it flattens out, that's us moving the POC down to a new node. So every time it moves down and kind of flattens out, as long as we are protecting that by either continuously moving it or selling that retest, we can go lower. If we start to do something like this, where it starts to break those value clusters, it starts to break that anchored VWAP from the breakout of balance, then we are going back into our old value. Okay. So at that point, if we were shorting this break of balance, we would really want to get out of our trade because we are going against that idea. We are breaking value to the upside. We are breaking the anchored VWAP to the upside. We are finding higher value. You see how the developing POC starts to move up? You don't want to see that, right? That means we're finding higher value. So that's a trick you guys can do if you're struggling on these balance days that turn into trend days. Use an anchored VWAP and a developing POC from the break of balance point, the candle that broke balance. And I typically would recommend doing this on a low time frame, like a 1 minute or a 5 minute. You want to watch the profile on the high time frame, like the 30 minute. But if you're doing this strategy where you're watching these dynamic lines, I would do a 1 minute or a 5 minute. I've been preferring the 5 minute recently. But all right, guys, that is it. If you guys want to support the channel, hit that like button. Be sure to subscribe. If you want to support the channel by using our Apex code, you can use code BREW, B-R-E-W, and get 80% off any Apex accounts currently. I appreciate you guys being here. I'll see you guys in the next one. Peace.